how might these investments directions directly benefit retirees in terms of improved returns, welfare, or general financial security, which is what most Nigerians want anyway?
Okay, so practically, like I said, when it comes to investing funds of pre-retirees in Fund 3, Fund 4, and Fund 6, the halal fund is split into two, for active workers and for retirees. The exposure to variable instruments is very low because number one, conservation of funds is primary target. How it can benefit, how this new framework for investment can benefit retirees, existing retirees, is that some part of their funds will still be able to go into very slightly some of these new instruments, agriculture, infrastructure, whatnot. But the bulk of, I believe, the bulk of people that are going to really benefit from this is people that have not retired yet, that belong to Funds 1 to 3 and Fund 4 active. Because if, for example, the average rate of return for a retiree is 12% or 15%, let's even say 15%, every year, if you have 10 million naira in your RSA savings, before you retire, your return rate is 15% because you're in Fund 3. As a retiree, your return rate is 14.5 because it's not as aggressive.
Yeah.
If you choose to stay in Funds 1 to 3, for Fund 1 and 2 that is more aggressive, your return rate has the opportunity or the possibility of being as high as 20, 25, 30%. Why? Because the assets that they're going to be invested in, yes, it's going to be higher risk, but the opportunity for getting much higher returns is there. So for anybody that is about to retire or going to retire in the next 5, 6, 10 years, they're going to have the opportunity to make much more when it comes to pension payments, because your funds are going to be invested in places that will give higher returns. So when you come to retire, your 10 million might be much higher. That is, I think that was the goal of why PENCOM opened it up to see, okay, we have been operating this system for 21 years. We know the benchmarks. Excuse me, we know the benchmarks. We know averagely what returns are every year. We know people that have been on pensions for the last 10, 15 years. So we are now projecting for the next 15 years, we want to move this figure from an average return over the past 10 years of 15, 20%. We want to move it higher. So how do we do that? Open it up. And as they opened it up, again, every single asset class has very strict measures when it comes to how much you can invest, the total size, where you can invest it in, and the companies you are investing it in need to have risk ratings and credit ratings. And I think the minimum is triple B. Triple B means is like, so let me bring it down to something you can understand. If there's a score of 100%, triple B is like 70%.
Okay.
So a company that you want to invest in must pass exam and get 70%, which is like an A.
Yeah.
So something like that. So it's very, very strict. And PFAs, depending on the human capital they have and the experience they have, it will now determine which particular asset class they're going to invest in, how aggressive they're going to be, and what returns they're going to be able to generate. Because each PFA, now their selling point is service delivery and return on investment. So if I want to retire and I want to retire with 100 million naira, I'm going to sit down, look at the board, which PFA is performing the best in the fund. I mean, if I'm in Fund 1, all the PFAs, over 16 or 17 of them, who is performing the best in Fund 1 over the last 3-4 years? I'll now go to that PFA and say, I want to transfer to that PFA because my plan is to retire 100 million, 200 million.